Hi, my name is Tabitha and this is
Deanne.
and we are so excited that you have tuned into our video. We're going to be talking to you guys about the tax code and the tax laws and how it applies to you personally as a taxpayer. Make sure to stay tuned because we will be shooting another video for you guys who have businesses and are looking for ways to have tax strategies to take advantage of the tax cuts. So we're going to get started. So I'm going to be interviewing Ms. Deanne here. And I like to just kind of like get a recap, like your professional opinion about 2018 tax returns. That's when the Tax Cut and Jobs Act came into effect. And just kind of give us some insight about what did you see about those tax changes and how did it affect the taxpayers?
Well, Tabitha, what I saw this past tax season, a lot of persons were disappointed, to say the least, with their refunds this year. And it's not their fault. They didn't change anything on their W-4s, but because of the Tax Cut and Jobs Act, it changed the tax rate. So with the tax rate being changed, a lot of persons realized that sufficient taxes weren't taken out, so either their refund was not as high as it was, or what they're accustomed to, or some persons actually owed the IRS.
So speaking to the tax rates, some tax brackets, well, all tax brackets from what I remember, reduced by maybe 1-2%, you know?
Yes.
So with the tax rates actually reducing, what caused the taxpayers to either owe more or not receive as much as they had in prior years?
Well, because the tax bracket, even though the tax bracket changed, they also changed the standard deduction. So the standard deduction became one flat rate, which sounded like a great thing at the time. But what you end up having is that you have a flat rate, so you're paying more, or you're paying taxes on more money. So essentially, you're paying more in the long run. So I think that's really what affected a lot of taxpayers this year.
So I think you're probably speaking to like the families that have more than one child. So
Yes.
tell us about that scenario.
Well, if you had a single individual that had one child, it wasn't so bad because prior to this year, or prior to the Tax Cuts and Jobs Act, the standard deduction was about $93.50, and they had an exemption of $4,050 per person. Now, with the new laws, it's just a flat rate, so they lost their exemptions. So they lost that $4,050 per person that they were claiming on the return. So they got a flat $18,000 for head of household. But if you had one child, it just a little bit more, should I say, you fared out a little better. But for the persons who had a married couple with two children, they did not, because their standard deduction would have been prior to this $28,000, when this year it was reduced to $24,000. So they're paying a lower tax rate but on more money.
Okay, thank you for explaining that. Appreciate that. And I'm sure the taxpayers that answered a lot of your questions as to why was my tax refund slightly lesser than it was last year. And so that's the answer.
Well, what they're going to be doing too is that come 2020, they're changing the W-4. It's a little less tedious, and so it should help to alleviate the problem that they had this year. But I thought that they should have changed it in 2019, but that's going to be going forward.
Okay, well, thank you for that insight. So, so the other dependent credit, how did that help taxpayers?
Well, that was beneficial because usually a child who has past age 17, they no longer qualify for the child tax credit. But with this new other dependent credit, even if you're over 17 and a dependent on the return, the taxpayer was able to claim an additional $500 of an exemption. And so that was helpful.
And so that allowed them to also claim their parents
It
and
allowed
other
you to
relatives?
get a credit per se for your parent
Yes,
and other
to receive a
relatives that are
credit.
on the return. And another change would be the child tax credit, which was increased from $1,000 to $2,000. So, and the limit.
You weren't limited to 2 children or 2
Oh,
dependents?
no. You were not limited at all. So they want you to claim all your children, yes, but you're going to get an exemption of $2,000 per child. So that was very beneficial, and it actually helps the persons who are at a higher tax bracket because it lowered their tax liability.
Got it.
So you were able to lower it, and the threshold changed. So it's about $400,000 instead of the reduced amount that they used to. So more persons qualified then.
Well, that
for
was very
credit.
helpful.
Yes.
That was very helpful. Okay, so let's talk about the Schedule A, the itemized deductions. I know a lot of taxpayers were accustomed to reducing their taxable income, all in the attempt to increase their refund. The Schedule A was totally like cut into half. Like there's a lot of deductions that you could no longer claim. Talk to us about the 2106, the unreimbursed employee expenses.
Right, so usually a taxpayer was able to claim any expenses that were not reimbursed by their employer, but the IRS thought that that was being abused, and so they didn't totally get rid of it, but there's just a very small, minute group that will be able to utilize that form. So on a whole, you're not able to write off your union dues, your mileage that your job, your boss sent you to pick up some supplies, and that mile that you would be able to write off, that's no longer available.
Right, and as well as your uniforms, your dry
Right.
cleaning,
Anything
cell
that
phone.
you would not be able. So these
Equipment.
lovely shirts that you've provided us, if I dry cleaned it, I would not be able to write that deduction off anymore.
Yeah, and so from a business owner perspective, I can write it off though. I can write off the fact that we purchased it and we provided it to all of our
yes,
team.
and when we get to that
And if we-
business return, we're definitely going to speak on that.
So the changes for 2018 really benefit, sounds like, the business owners.
Yes, business owners were, I think that group benefited from, and usually they do because they're able to write off more things when you're a business. That's the reason why most people incorporate,
Right.
to take that liability from them anyway.
You're gonna have to stay tuned for that, okay? That's on another video. So we talked about the Schedule A and the property tax. So let's talk about the property taxes.
Yes, now it's not just property taxes, it's taxes in general. So usually we're able to claim the general or sales tax that you acquire or over the year, and you're also able to write off your property taxes, taxes on a new vehicle or any large items. All those taxes have now been capped at $10,000.
Wow.
So even persons living in certain areas where their property taxes are $13,000, $15,000, they're capped at $10,000 only. So they're not even going to be able to utilize the sales tax deduction at all.
Wow.
So it's just one tax and it's capped at $10,000 for taxes.
That hurts a lot of people.
Yes, it did.
Yeah, we've seen that. Let's see here.
And there's one more thing on that Schedule A also, the casualty and theft.
Okay.
So that form right there where we had in Texas, we experienced Hurricane Harvey or any state, the only time you're going to be able to utilize that form is if it's a federally declared disaster like Harvey. So if someone stole your car and you weren't fully reimbursed by the insurance and you would be able to write off the casualty and theft in the past, you're not going to be able to do that anymore.
Thanks for that insight. Could you speak to the alternative minimum tax?
Well, that kind of helped because the threshold, I don't remember the exact number, but the threshold changed. So less people are now paying alternative minimum tax. So that was something that was positive.
That was positive.
Yes.
Good deal. Well, I think we have covered all of our bases today. Is there any additional points that you'd like to share with anyone?
Well, I know that they made a big hoopla about the 1040 this year, and it's now been changed that we have one 1040,
Yes.
which has now been supposedly minimized to just 2 pages, but it's 8.
A postcard?
A postcard.
Well, this is not the size of a postcard.
For the upcoming tax season, they're also going to have a 1040 SR, which I've seen it, and it looks very similar to the old 1040 that we're used to, but it's for seniors. So it's kind of customized, meaning their exemptions are a little bit different. So it has their tax table on it, and it just makes it a little bit easier. But I just thought that we were past more than one 1040s. Now they're going back to a 1040 SR, and it's going to look pretty similar to the old one that we're accustomed to.
Yeah.
So that's something that's new.
Yeah, but then we adopted 6 different schedules, 6 new schedules.
Well, that one is not going to have the schedules. It seems like it's just going to be a 2-page document, similar to what I'm saying to the old 1040 that we're accustomed to.
Cool. Awesome. Well, thank you so much for tuning in, and we'd like to encourage you to visit our website to learn more information about our services, and you can most certainly download our mobile app and send us your tax documents and information securely on our app. It will come straight into our software, and we'll be able to help you file your taxes in a manner whereby it's it's beneficial to you, and we'll give you our expert opinion and insight as to the best way to file, best strategies for the upcoming season.
And I would just like to add that, I encourage you, choose Smart Tax, because at the end of the day, we're open year round. So if you have an issue even outside of tax season,
Yes.
you'll be able to get us. And at least we can give you some insight. I just got a letter from the IRS in June or May or whenever it is outside of tax season, you can always find us. So choose Smart Tax.
Thank you so much. And you can find us at www.smarttaxbiz.com. Thank you so much for tuning in. See you soon.